How is crypto actually bought, sold, and bet on? A quick, honest tour of the markets, and one rule first. This is educational only, never financial advice. You trade in two places. A centralized exchange runs an order book and holds your money, like a brokerage. A decentralized exchange lets you swap from your own wallet, with no company in the middle. The on-ramps and off-ramps convert between regular money and crypto. Because that's where dollars enter and exit, it's where identity checks concentrate, and where investigators most often unmask suspects. Spot trading means actually owning the coin. Derivatives are bets on its price without owning it. Crypto's specialty is the perpetual, a contract with no expiry, and these let people take very large, leverage positions. And leverage is the danger. At 10 times leverage, a 10% move against you erases your whole stake. When thousands of leveraged traders get liquidated at once, prices crash even harder. Crypto's thin markets make manipulation common. Pumping a coin, then dumping it, faking volume by trading with yourself, or posting fake orders to mislead. Always be skeptical of sudden hype. Markets, leverage, and the tricks that fleece newcomers. Educational only, never financial advice. Next, how to value a coin and judge its risk. Subscribe.